Tuesday, March 22nd, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at how gold, silver, and commodities ignored Jay Powell's hawkish tones yesterday, while actually bond yields spiked massively and bond prices really dropped quite significantly, and that's government bond markets. Before I start though, just like to say that it's really nice to be back home, but it was really nice also to be in Switzerland visiting my family after about 2.5 years of not being able to travel there to see them. Yesterday, I'll just give you an idea where I was and the travel that I made yesterday. My sister dropped me in Spitz, which is basically central Switzerland, as you can see by that map. And from there, I took what they call the intercity train. And it basically went almost straight to Zurich Airport. It stopped in Bern, and then it stopped in Zurich. Zurich Airport station is not far from Zurich. So you can see on the map here what I did. And after that, I traveled from Zurich Airport to City Airport, which is a small airport in, basically East London, near Canary Wharf. And just an interesting thing, I was sitting next to this older gentleman. He was by the window. Didn't really speak much during the flight. It's only an hour and 15-minute flight. When we landed, and it's right on the Thames City Airport, you kind of wonder whether the plane is going to break enough in order not to go into the river. But the grass around the city airport looked very well manicured. And I just said to him, oh, it would be nice to have a golf course in the middle of the runway. And then he said, well, I just saw Scott Morrison's government airplane, the Australian Prime Minister. And I said, well, that's interesting. And then when the plane made a U-turn to go back to the main terminal, I saw the plane. It had an Australian flag, no writing on it. It was quite a small plane. So I don't know what this is all about. I didn't see any news of Australian officials meeting British officials. And it could have been a routine flight by Australian diplomats, who knows? But is there something going on as it pertains to China and Taiwan? And why would that really be associated with Australia? Well, because Australia really is the Anglo-American empire's agent in that part of the world. So, and they had this new treaty, AUKUS, I think last year. They signed up, UK, US, Australia. So who knows? Maybe I'm reading too much into it. I just thought I'd put it through to you. So now back to the subject of this video. There's been a lot of talk in the last year or so, because the Fed has been pre-announcing that they're going to have to tighten policy. They're going to have to stop QE. They're going to unwind their balance sheet, raise rates. Yet it took them a very long time to actually raise rates. They're dragging their feet, so to speak. They're way behind the curve. And a lot of naysayers, especially as it pertains to precious metals, gold and silver, and the miners, have been saying, well, when interest rates rise, when yields rise, gold will go down. Because the real yields are going to go from negative to positive. But I think they're going to be proven wrong. And of course, anything's possible. But as I said, the Federal Reserve and other central banks, they're way behind the curve. And why is that? Well, because there's so much debt in the system, so much leverage not only in the financial sector, in the banks, but also households, governments, non-financial corporate entities. Yeah, a lot of debt. And if they raise rates too quickly, it could unravel the whole Western financialized economy, credit-induced economy. So I think they're going to take it very cautiously. And despite the fact that yesterday, Jay Powell said that the Fed was prepared to move expeditiously towards tighter monetary policy, and he said he's prepared to act even more aggressively if necessary to tackle excessive inflation. So this is an article from the FT. So he spoke to the conference hosted by the National Association for Business Economics on Monday, yesterday. And there's even talk now that they could hike by 50 basis points in one of the meetings. I think their next meeting is May. He said that. He said, though, that there's no decision in terms of a rate decision for May, but he said there's a possibility. And just to show you how behind the curve, how not really hawkish central banks have been for decades. The last time the Fed raised rates, according to this article, by 50 basis points was in the year 2000. So 22 years ago. I mean, that's quite amazing, and that's not very normal at all. And I'm going to show you here a couple of charts now, going back to the 1970s, to show you how the Federal Reserve back then as well, they were behind the curve. Yes, there wasn't as much debt. The U.S. Fiscal situation wasn't as bad, but they tried to drag their feet too, and that's why you had rising prices in the 70s, because they were behind the curve. So first I'm going to show you a chart of gold going back to, let's see here, January 1970, when it was still fixed at $35 an ounce. And then, of course, in August of 71, that all ended. Nixon closed the gold window, and basically gold went floating, really, in 1971. And the price started rising, and it made a top just below 200 back in December of 1974. This is a monthly chart. It might have traded, let's see, 195 or so. And then up until August 1976, so this was December 74, August 1976, it was in a bear market, so to speak, and it bottomed, let's see, around 102. Let's see, the top in 74, I've got it here, is 195.50. So it dropped almost 50% there, dropped to 102. And now I'll show you a chart of the Fed funds. You can see that despite the fact that gold went up from 35 to almost 200, from 71 to December 74, Fed funds went up from around 3.7 to all the way up to almost 13% in July of 74. So actually gold went up with Fed funds rates. And it was actually when the Fed funds rates dropped that gold had kind of a bear market. And then they started raising Fed funds again back in, let's see, April of 77. And we saw Fed funds eventually go from just below 5 in 77 all the way up to almost 18% in April of 1980. So, and I'll go back to the gold chart now, and it was from that bottom in August 76 that gold went up almost ninefold, from around 100 to just below 900 They have a high here of 1850. I think intraday it was 887.50. So actually, yeah, gold followed interest rates or the Fed funds rate. So this talk that it's going to be a negative for gold and silver if the Fed raises rates is not really based on fact, historical fact. And I think it's always good to go back to see how things happened in the past, because things always repeat. I would say it's the old cycles and the old saying, Ecclesiastes, about nothing new under the sun. So it was interesting yesterday then, because we saw the 10-year yield spike to, I think it's a 23-month high, something like that, maybe more, or a 33-month high, actually. It went up to over 2.3%. And don't forget, we started the year at 1.5. So pretty soon we could be at 3, who knows? And yields will have doubled in less than a year. Right now, the 10-year yield is unchanged at 233. And I noticed that other countries' yields, like Australia, the Australian 10-year yield spiked quite significantly. I remember until recently it was trading below 1%, and it's now, or yesterday, it was around 2.7. Even the German Bund, the 10-year yield, which is the benchmark for Europe. And after the US bond market, Treasury bond market, or government bond market, the German government bond market is probably the most important one in the world. And yes, we saw it spike from negative to let's see, 33 basis points back in February, and then it came down back to negative, and now, as you can see, it's really accelerating, and we broke also the February high, and we're almost at 0.5%. When I worked in the City of London as a futures and options broker, I traded a lot of German government bond futures, the Bund future, for my clients. And back then, I remember in 1994, the Bund yield was above 6%, and the contract, the Bund future contract, the specification is that it's a 6% coupon. So we're in really unnatural times, and there's a lot of room on the upside for yields. And despite that, gold and silver, they didn't really explode higher, but they were up on the day. Gold held that 1920 level. Silver led the way. I noticed my miners did fairly well, despite the fact that they came off at the end of the day. They finished positive. So yes, we just need to be patient. We need to be aware that there's going to be a lot of volatility out there, because the system is so leveraged. Not just the economy, but also the financial system through derivatives. Some of you have asked me if I can talk a little more about derivatives, and I will. But if you want to find out more about derivatives, I have a playlist. It's called the Derivatives File, and it's got more than 10 videos that I've covered derivatives through the years, because I was a derivatives broker. I wasn't an over-the-counter derivatives broker, but exchange traded futures. And my clients were institutional clients. I didn't trade for private clients. And it was one of the reasons I started this channel, to show the average person how I would talk to maybe clients from, big banks, mutual funds, corporate clients, and even brokers. I had brokers that were clients, even though I was a broker, because they weren't as big, their company, so they used us. And that's how this channel evolved. I wanted to show how, people in the markets, if you want to call them professional, operate, and maybe pass on some of that knowledge. So with that, let's quickly look at where the markets are this morning. It's just gone past 8 o'clock. It's 8:05 a.m. London. We've got spot gold at 1932. It's down just over $3. Range has been 38 to 29, so quite a narrow range. We got spot silver up 3 cents, 25.22. High's been 40, low's been 10. The Dow futures up 41, NASDAQ up 20 points, S&P up 3.5 points. FTSE is up 15 points at 74.66. And the Eurostoxx is up, Eurostoxx 50 is up 8. So stock market fairly quiet at the moment. That could change, of course, in about 10 minutes. To the currencies, sterling is down 0.2%, 131.43. The euro is down almost a third at 109.84. Yeah, and the yen keeps really falling off. I mean, I would be very happy if I had gold in Japan right now. Gold price is near all-time highs in yen. So yeah, the dollar's up almost, well, more than 0.75%, which is quite significant at 120.41. The dollar is unchanged versus the yuan at 637.16. To the other currencies here, Aussie dollar is down 0.1%, 73.91. The dollar is up slightly versus the Canadian dollar, 125.96. And the Kiwi dollar is unchanged at 68.80. To the general commodities, crude, WTI crude is up 1% at 111.02. So yeah, we did dip below 100 last week, but we're right back on the move higher here for crude. High grade copper is down 0.5%, 469.37. And just to finish off here, a quick look at the 10-year yield. Yeah, it hasn't really changed. It's at 233. And again, the yield curve, it's inverted from 3s to 10s. Usually you want to look at 2s to 10s, but inverted 3 to 10. Also the 5 to 10 is inverted. And why is that significant? Well, it points to a recession, even though the Fed thinks they can keep the US out of a recession. And why is there a recession when the curve inverts? Well, because banks don't do as well and they don't lend as much because they usually borrow short-term and lend long-term. So if short-term yields are higher than long-term yields, it's not going to help their profitability. And that's why, you know, it usually points to a recession, an inverted yield curve. Don't know what Billy is up to. I think, yeah, anyway. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.